7%. We are 7% away from the Nasdaq market hitting recession territory or officially entering a bear market. What's going on, guys? It's Ricky with TechBud Solutions. For those that do not know, markets have been recently retracing, and the official or the technical term of us entering a bear market or a recession is when we see a 20% downturn from all-time highs. And if we look at overall Nasdaq market from the overall highs to the lows that we made, we have sold off over 13.7%. From the current level, we're right around that 13% mark, which means 7% more is what the Nasdaq market as a whole would have to lose, and we would officially enter a technical recession, which is a 20% downturn from previous all-time highs. Now, as of right now, the overall trend on the 4-hour time frame is still incredibly bearish. Why is this happening? Again, if you guys obviously have been paying attention, it's the trade war. It's what's been instilling a lot of volatility into the market. There's a lot of fear that's being injected into the market. And because of that uncertainty, one day we're in a trade war, one day we're not. And that's why, again, we're seeing a lot of this negative selling pressure because we do not know what is going to happen as Trump continues to wave the trade war flag. Now, again, this shouldn't be much of a surprise. We kind of understood that this was Trump's intention, but he's actually doing it aggressively, and it's kind of all over the place. Because of that, there is a lot of volatility, and yes, it is a very crucial time to be careful with how aggressive you are with your trades. Now, this should be very exciting for investors. Obviously, trading is very different than investing. Investing, you shouldn't have an intention to make money now, but hopefully in the future. Because of the markets pulling back so much, they have presented great deals. Maybe I can make a video about that over the weekend, but as of right now, I wanted to really highlight some of the things that I think would be important to know of where we currently stand and how, I don't want to say how much worse things can get, but kind of, right? So let's just go ahead and jump right into it. I hope that you learned something new, and if you do, all I literally ask you to do is smash that like button and subscribe to the channel if you think that I earned it. So the S&P 500 has just closed in correction territory, and the Nasdaq 100 is now 7% away from its first bear market since 2022. So over the last 16 trading days, the S&P 500 has erased an average of $340 billion per trading day. Now, that is pretty wild. If you guys haven't seen the stat, I think in total, the overall markets have lost $5.5 trillion in the past overall 30 days. Something to take into consideration. Again, it's not just a light pullback. It is pretty substantial, but markets were very overbought, overextended. So maybe it was a nice correction that was needed. And yes, things can get worse before they get better. Let's talk about it. So again, this is the overall breakdown. I hope that this can kind of summarize it. This is the first time that we actually saw the initial pullback. Well, actually the second week, because the first week, if you guys don't remember, was the DeepSeek kind of like, not hack, but when DeepSeek came out and, you know, NVIDIA, everyone thought that AI might have been being overinvested, right? So markets corrected and then quickly recovered. And then the following week was the trade war concern of, you know, Trump really began to implement these kind of like these tariffs. And then from there, we recovered again, and then we made new all-time highs. When we began going into this downturn, this is when he began to go live with, again, the Canada and Mexico tariffs, prolonging them, postponing them. And this is why we saw big upswings, big downturns, because one moment he's postponing them, next moment he's not postponing them, he's putting them into effect. And then Trump says not watching the stock market. Again, numerous things back and forth, not just with Canada and Mexico anymore. It then went with, you know, Europe, it went with China, it went with the, back and forth. I think it even went over to what they would do to Russia. And then since then, in the past 16 days, the S&P 500 has erased $5.5 trillion in the past 6 days. Now, this is one thing that I thought would be pretty useful to kind of just take into consideration is that dip buyers no longer, so stocks have gone 15 consecutive sessions without any actual gains. So again, this is for the S&P 500. How many days in a row we have seen this? So far, we're right around 15. We'll see if this ends up changing. And this just shows in its past, again, it's not the biggest. There's a time that we almost hit 20 back in the middle of 2023 to 2024. And then back in 2020 was when we went through that big downturn. We went nearly 30 days with, again, almost no consecutive green days. So again, the selling pressure can continue. And this is just consecutive red days, right? So something to take into consideration. The Magnificent Seven, remember, it's not just the overall market or not just your singular stock. It's the overall markets that have seen this downturn. But this just kind of breaks down the Magnificent Seven of how much they've actually lost, from Tesla being the biggest loser, as of course I've made it very clear from when Tesla was pushing up for no reason, just because Elon was affiliated with Trump and Trump was the president-elect. Tesla began to skyrocket. I made numerous videos of, hey, Tesla isn't a $1 trillion company. I'm not saying that it can't be. I'm not saying that it won't be. I'm just saying that it's not now. Just a week ago, right, when they had their cyber roundup or their robo-taxi event, no one cared. I mean, markets actually reacted in a negative way, where Tesla went from 270 down to 230, 240. And I was kind of caught off guard because I kind of liked that event. I thought it was very encouraging for Tesla. Wall Street didn't like it. But then all of a sudden the sentiment changed because he was affiliated with Trump. It pushed for no reason. Nothing fundamentally changed about the company from then nor from now. And Tesla is currently trading at a level that was very similar to what it was trading then. Again, Tesla was down in the year of 2024, and then all of a sudden had a huge 100% upswing. Then it was green. So I want to make sure that you know that yes, the most overvalued stocks are always going to see the biggest pullbacks because they never belonged at those overbought levels. Nvidia, 25% pullback. Alphabet, 22% pullback. Amazon, 20% pullback. Meta, 20% pullback. Microsoft, 19%. Apple, 19%. Again, these are the Magnificent Seven, some of the most valuable companies that are publicly traded. So this could or should kind of excite you. If you've never invested before and you've always just focused a little bit more on trading, now maybe is the time to put a few bucks if you can afford it. But remember, investing is different. It's, can you tolerate the time that the markets might take for it to recover? Now that we're talking about how much time it might take for it to recover, let's talk about it, right? Stock market crashes since 1950. It talks about the dates from when they start to when they actually begin to recover. So the overall percent decline, so far, the most recent one was the one that we experienced from 2021 at the end to nearly the end of 2022. This was 287 days. The one for the pandemic, if you guys remember when we had that COVID crash, that was a 33, almost 34% pullback. That was only 33 days. When it came down to the 2009 pullback, that was 62 days. 2008, 408 days. 2002, 278 days. 2001, dot-com bubble, 546 days. The overall average, I mean, you can go down the list, you can screen grab this, 338 days. Average does not mean that that's what it's going to be. Again, there are many times that we have seen significant pullbacks and it just lasts 1 month. Right now, again, right around 15 to 16 days of this pullback. Again, we're not even fully entering recession territory yet. So I'm not here to instill fear. I'm just here to provide the data of what has happened in the past before. You can see that sometimes there are really big numbers and things obviously went really bad on this, 2001 and 2008 for those substantial, 408 or 546 day, sell-offs. Yes, that was a kind of different story. There was a trigger, there was a catalyst. I don't think that we're there yet. Doesn't mean that we can't be, just we don't have, the dot-com bubble crash factor. We don't have the housing market bubble crash factor. So something to take into consideration. It's good to take this just to understand the data that it can get worse, but also to understand why it was so much worse maybe then versus now. So I just think it's useful because, again, obviously we're only 15 to 16 days in, and there are some pullbacks that only last 30 to 60 days, but this should ultimately excite you. I know a lot of people don't like shorting. So a lot of you guys have been watching maybe either my Instagram stories or my YouTube videos where I recapped a lot of my trades. A lot of my trades have been shorting the market. I like to short. I short with shares. I don't short with options, and I close them out every single day. My LPP team gets to watch me trade live, and I think it's a great way from right now as the markets sell off to be able to make money for me. But I know that a lot of you guys don't like to short. Maybe it's too risky. I respect that. I'm never going to be here to try to convince you. I want to encourage you to then pick 1 or 2 stocks that you plan to buy the dip on as this market is pulling on back. Good quality companies. I don't want to hear no bullshit companies. I want to hear good quality companies that even if you just buy one share, position yourself well and just to test it out, especially if you've never invested. I think it'd be a good way for you to get your feet wet. You get a good deal. And again, it's all about, can you tolerate the time that it would take for these stocks to recover? Right? Very simple. An example would be something like NVIDIA. Not telling you to buy it. I'm just saying that, well, if it does recover, what does it offer? It has sold off about 25%, which means that if it recovers, it offers about 35 to 40% of potential recovery if it recovers. It doesn't have to recover soon, and things can get worse before they get better, but I think you have to have those conversations now. So again, you prepare in advance, not predicting the future, but simply preparing for it. So very excited to follow up. Again, if you guys want me to make more of a detailed video about this over the weekend, all I ask you to do is smash that like button, get this video to over 1,000 likes. That'd be more than happy to put it together for you guys. Like always, let's make sure that we end the year on a green note. Take care, team.